What if that next major rally shaping up in energy is not in renewables, but dirty, old school oil? In the next few minutes, we're showing why oil stocks, yes, oil, are flashing a green light right now and why they could provide some huge opportunities over the next couple of weeks and months. Supply tightness, geopolitical risk and shifting global flows are quietly tilting the odds. And who better to dissect this than our market veterans with decades under their belts, featured by the Australian Hot Copper, Sky News and more, and backed by full AFSL licensing and accredited research credentials. Stick around because we are going to give you a full breakdown that could change how you position yourself for 2026. I'm Janine Cox, joined by senior analysts Philip Tortevsky and Pedro Benales, and we are Wealth Within. Good evening.
Good evening.
How are you?
Good. Got that out. Bit of a tongue twister.
Big one, wasn't it? And the dirty old school oil, you know, that almost made me laugh. So lucky I didn't.
You've picked the right show to host tonight. It
slide
seems.
Across on oil.
Right up your alley, right?
Yep. So you guys are really interested in this one, aren't you? I know you are, particularly Pedro, aren't you?
Yeah, definitely. I'm looking forward to getting your thoughts on that as well.
All right, let's get straight into it. We're seeing Bloomberg report that AI-driven power demand is surging well beyond grid forecasts. How much of that uplift could realistically spill into higher fossil fuel consumption over the next year? Phil?
Yeah, all right. Well, the numbers are saying at around, for the next 7 to 10 years, renewables are not going to catch up for the demand that the AI data centres are requiring. So we've got about a 7 to 10 year gap in that space right now. And I mean, you know, by all the numbers, the data centre production, growth, expansion is growing at a decent pace. So right now, I mean, it's interesting because we're sitting in a scenario where we've got oil stocks, energy stocks, if you will, the fossil fuel type in particular, that aren't really booming like the rest of the market, yet the underlying demand is surging higher than ever.
It's bizarre, isn't it? How is it like they couldn't get that right in terms of the balance right?
Well, yeah, I mean, there's a few factors. Obviously, one is the cost. Like transitioning over to the renewables has been a lot more expensive than they initially thought, time-wise as well, in terms of getting it all set. So, like most things, there's always a lofty goal that gets put out and then reality sets in.
And it creates an opportunity, doesn't it?
Yes, that's right.
I would also look at who's got vested interest in renewables, but that's a different story.
Pedro, there's conspiracy theorists. With recent reports on Reuters and Bloomberg showing fresh supply disruptions and stronger than expected demand, how likely is it that oil stays tight and prices remain elevated into 2026? And what's the main downside risk? Pedro, fill us in.
Well, the main downside risk is obviously supply, and we're looking at places like Saudi Arabia that have really turned off the tap, but can open it at any second as well and just flood the market with supply. We've got geopolitical risks. The main one that we're watching is Russia, because they've been exporting a lot of oil. They're using their ghost fleets, which are bypassing the sanctions, and you know certain countries are buying oil from them. But we've got now Ukraine starting to target that infrastructure, targeting those ships, targeting the refineries. So there's elevated geopolitical risk there. And of course, America's threatened extra tariffs on countries that are actually buying oil from Russia. So that's the kind of the demand side, and the supply side is obviously a big factor in that as well. So they're the two things that I would watch out for.
It's all heating up, isn't it?
Yep.
Okay, stock time now, boys. What have we got?
All right, we've got a few good ones. Let's start off with Woodside. I mean, this is a major player. I mean, I probably shouldn't talk about Woodside, should I? Pedro's here.
All right. I might get jealous.
Sorry, mate. Go.
You're right. You can have it for now.
Are you sure?
Yeah.
All right.
Go for it. I want to get your take on it.
All right. He might have a temperature, Pedro. Who knows? He's not pinching me, so that's the main thing. But look, Woodside, I mean, for me, this stock, right, we've spoken about it a few times in the past. This level through here, and I'll mark at the $20 level with the horizontal line, because it has been, to me, or $19, the most important level since COVID. We saw the COVID correction. We've seen it test 1, 2, now 3 times at this $20 range. And I think that is, for anyone looking at this more longer term, in terms of drawing those lines in the sand, $20 is where it's at for me. I think as long as it holds there, then it gives you the I guess, more chance, higher probability stacks up that this pullback here at some point is lending itself towards a reversal. And we're already starting to see, I guess, the early stages of something like that unfolding. We saw big buying come through in June, much different to anything from this recent correction. And we're starting to see support even on the upside here. Sellers failed to take prices below 20 this time. So it's really a situation where since 2020, this is the first time that sellers have tried, but not been able to bring it back down to 20 bucks. So I think, you know, if this gets going now, given it's been a lagging sector, you know, even short-term players looking for moves anywhere up to around that $36, that's a safe target to assume for Woodside in the more medium to long term. I'm not saying in the next week or two, but I think as long as it starts to take out these highs in August 25, watch this stock because it's been brewing for a while. And it's one of the biggest players out there that we do have on our market. And I think it might start to get going soon.
Great. Pedro, do you want to make a comment to it as well?
Yeah, look, I love it. You guys know my opinion on Woodside. And I'll just quickly outline one thing that probably we haven't mentioned in the past is what I like is every time it has broken these previous lows, we can see that, you know, it has been on a long-term downtrend. So every time that it's tried to pick up, it has broken and it's broken below those previous lows. More recently, that line that Phil has marked there, it has failed to break below it. So it's actually holding up quite nicely. It hasn't broken this previous low of 2020. So that is very positive. That looks like it's in a new cycle in its uptrend.
And Santos obviously is right up there as well. What are your thoughts on Santos after the failed acquisition?
Yeah, well, I think it goes back to something that you've said in the past, is that if somebody was willing to buy it at $8 and, you know, that actually failed for certain reasons, then you could justify an $8 valuation, I think, for Santos. And right now it's trading at $6.46. So that's a nice little upside there for Santos. So technically on the chart, and I should expand this out on the monthly, technically it's looking very interesting to me because right now we've got that $6 level, which is right around the corner. It's just getting to that $6 level. And it's been range bound ever since, you know, 2017, basically for the last, 8 years. It has been stuck between $8 and $6. It's now getting to that bottom of the range. Let's see if it holds up here. If it does, then we should expect a bounce up to that $8 and then possibly, you know, break it. And we could even have another takeover bid around this $6 level that we've seen. So expect some moves because this is a big player in our market, huge gas exports, and they're not going away anytime soon. They're a very profitable company.
Yeah, I'm excited already looking at these stocks. And I'm sure you are as well. What you really need to get excited about is this book, How to Beat the Managed Funds by 20%. Dale wrote it himself, and he's put all of these juicy little nuggets in there, things that are going to help you to trade oil stocks, to trade any stocks on the market well. It's how to position yourself in the market, and a lot of things that I know that a lot of people miss when they're getting into the market. Have got no idea about the way to structure themselves and manage their risk. So this is really important for your future going forward. Make sure you grab a copy today. Now, the next stock we've got is Karoon Energy. Phil.
Yes, all right. Another stock that is quite interesting. Let's go and take a look at the chart. Now, what you'll see a theme with all these stocks we're showing, it's not like many of the other sectors, as we mentioned earlier, the tech sector, the financials. Yes, they've come off recently with the correction, but a lot of them have price charts nearing all-time highs or trading at all-time highs. This is different, and therein lies a potential opportunity for that, you know, more longer term move if it is to come. But when we look at Karoon right now, again, things are starting to turn the corner. And I say that because October 23, in this downtrend that lasted a couple of years, then you look at what's unfolded since. Buyers have come through, sellers haven't been able to take it lower. We've had buyers push through again. Sellers have had a second shot and they still haven't been able to take it lower than this level at around $1.25. So we're starting to see the, I guess, structural dynamics of what you would like to see in a bull market, more so than a bear market. And we're really early. So I think, you know, right now, if price can continue to get going, break into that 180 level, in fact, get to around $2, that's going to give confidence to say that we're going to move into potentially challenging these highs at around 250. I think that's the real important level, big picture, medium term. And if I zoom that out, you'll really see what I'm talking about.
Now, this stock is on the watch list of a lot of traders. So is this a stock for beginners, people who are new to the market, or do they need to have really studied and had a proper education before they venture into these type of stocks?
Look, I think first thing, proper education is, I mean, goes without saying, right? Because whatever the stock is, whether it's a more volatile stock like the energy players or whether it's a REIT, at some point you've got to buy. And if you don't get the buying right, what's the point, right? You're not going to walk away with a profit, which is the end goal of what you're trying to do. So, especially so when you're looking at a stock like Karoon, given it is quite volatile, getting that timing right of the entry means a lot in terms of protecting a position on the way up, keeping profit when it comes, knowing when to get out, because when it reverses on you, it can reverse quick as well. So having rules, proper entry strategies, exit strategies, that's what's going to allow you to thrive in these particular type of sectors. And it's important because these are the sectors that give you the quickest growth.
Yeah, and I was having a conversation with a guy this morning who has gone through and he's done our diploma. This is where it's so critical for you out there watching this right now, the opportunities that are there still to come, and to be able to take advantage of that as well as manage your risk. You really got to get that foundation right first and get that education. And this is a really good time for you if you're looking to do that. Maybe you've been sitting on the fence thinking about it. Well, don't do that anymore, because we've got one of the most amazing offers right now. It's going to save you thousands of dollars, and also you'll be able to get lots of additional benefits to you. There's things in there that provide extra support as you're going through the course. So I really encourage you that now's the time to get on board and do that.
Yeah.
All right. Our next stock we've got, Pedro, do you want to take that one away?
Yes, sure. So next one is AEL. This is one that we covered in one of our Monday shows, and we were actually quite excited about it. Right now, it's still kind of in that consolidation phase. It's trading sideways a little bit, but it's looking like it's ready to do something. It's quite exciting. It's at all-time lows. You can see if I expand out the monthly chart here, you know, that around that $1 has been really the nice springboard for long runs. And this is where the benefit comes from analyzing a chart. I mean, imagine knowing that every time a certain price point happens, something is going to happen. That's valuable information to know. I mean, it would be for me anyway. And that's exactly what looking at this chart is telling me, that every time that this stock hits around that $1, here it was a little bit more, it was $2. But $1, it provided that springboard for that future move. And it's done exactly that in December 2023. So just give this one time. It doesn't unfold in a couple of days. And that's another thing that I see many people do, and students that come to us. You know, they want maybe that kind of that shorter term trading, which you can build your way to that. But first you have to have that patience to be able to sit out those moves, sit out these types of moves, and then get that real kind of that sharp move that's coming up, because that's what happens. You know, in these earlier periods, you get that sideways consolidation, sharp move to the upside. You don't want to miss that. You don't want to get impatient and get out before that happens. So right now, I think that's what's happening with AEL.
What's the potential on this one then?
So the potential, I think, at least to that upside to $4.50, say roughly around that $5 if you want to, just square it off. That's where it has met resistance in the past. And you can see, I'll go back on the chart as well. Multiple times it has hit its head around that $4.50. So I'd be, putting my, my next resistance around there. And that represents a 65% upside to where it's currently trading. Of course, you would have to back test it, and you would have to figure out, what's the best trading strategy.
And the risk.
And the risk. What's the risk to reward ratio here? But, just the momentum is up at the moment. I'll just finish off with that. We've got a nice little momentum that it's bounced off. So it's holding up. It's holding up in a nice uptrend. I like it.
Yep, looks pretty good to me. Now that wraps up our first round, but don't go anywhere, because we have more amazing stocks coming shortly. Even a few smaller cap plays that look like they're about to take off any minute. But now, time for our trending topic this week, Phil.
All right, so Japan's bond market is blowing up because the Bank of Japan is finally raising interest rates after keeping them near zero for almost 20 years, and that's shaking the whole world. Now, think of Japan as the country that kept money cheap for everyone, and suddenly that cheap fuel is disappearing. As Japanese bond rates jump, huge investors who borrow cheap yen are being forced to unwind trades, selling stocks, selling foreign bonds, and pulling money back home. Now that pushes borrowing costs up worldwide, hits share markets, and risks a chain of reaction that could slow the global economy. Now, if Japan loses control of this, it could spark a sell-off across world markets, because Japan is one of the biggest lenders on the planet. But does this create a massive trading opportunity in the yen? Because rising yen yields force traders to unwind carry trades, meaning as they sell off their foreign assets, they end up buying the yen back to repay the loan, which could send the yen sharply higher. So let's go and have a closer look at the US dollar JPY. I mean, this is a fascinating development at the moment.
Yeah.
And it was this whole play where, you know, borrow cheap on the yen and go and invest it out in the US. And now that the situation is starting to turn, I wonder whether this could be one of those big catalysts that spoofs the market.
Now, you talk a lot about currencies over time you have, and you trade currencies yourself.
Yeah.
Is this a currency that you particularly enjoy trading?
Well, it's one of the majors, right? So it's important. I mean, when you look at what you get, if we just go to that chart in terms of being able to, and the trading conditions around it, in terms of spread and all that good stuff, it's a great instrument, that is for sure. But when I look at what is happening right now with the yen, and this is the USD JPY, there are, you know, you can trade the yen on its own. If you're trading futures, you can trade the Japanese the other way around. This is the USD JPY product, which is the most common for most people in Australia that are looking to get into this space. But the risk of the yen going for a big run, meaning the US dollar Japanese pair currency here that we're looking at is likely to fall. So that's a scenario we're looking at here. And I'll tell you, it's getting very interesting because we've seen this big buy through February. Right now, what we're seeing on the monthly chart is what I would say a bit of congestion, but potentially a bit of indecision. The market's not sure where it wants to go now. And that's been happening since November 2023. You can see it be really tight, range bound 155 to 142. And so I think if we start to break below this 141 level, potentially we might be on the onset of a nice little, you know, short trade for this instrument here, meaning the yen's going to go for a bit of run. So I'd be watching 141 very, very closely because this scenario, as I mentioned, Japan is what it is in terms of being one of the biggest lenders globally, and that money's being pushed worldwide. So this could be more interesting than not down the track.
I mean, we teach students through our Forex CFD course how to trade these currencies and how to take advantage of the long and the short of it. But where are the best opportunities? Is it when the currency is going long, or is it when you've got a short opportunity coming up?
Well, most often when you're shorting anything, whether it's a stock or a currency, the shorting happens a lot quicker than the upside. So you do get that, you know, and you also get the benefit of certain costs. I think each individual situation needs to be looked at as that. If the long opportunity is present, you take that. If it's the short, then that's the case. And that's why this catalyst might be the overriding macro that can help you determine which way, because, you know, previously it was the other way around. For a
long trade, what's the ideal length of the long trades in this currency?
I mean, how long is a piece of string, right? What's your strategy? Are you trading long term? Are you trading medium term? Are you trying to scalp? Are you trading short term?
Because a lot of people who are new to the market, they're just trying to scalp, aren't they?
They are, yeah. But then that goes back to what Pedro said before. You know, when we're looking at that stock, he was saying, well, because the reality is anyone can draw a line on a chart. You could draw a million lines on a chart. But what's the important line on the chart? What's the significant line? That's the difference.
That's why they need to have a really good education and not just guess.
Yeah, and a lot of traders do that. They start off on the 1 minute time frame or the super short time frames and wonder why these, you know, techniques aren't working. Well, it's because you're not transacting at a significant level. And where do you find that significant level? How do you determine that? These are all things that are taught from my perspective. Not, you don't just wake up one day and know them.
Yeah.
And so that's why even when you look at currencies, identifying those significant levels on the bigger timeframes, they help. And then you work your way through things. But, you know.
What I found interesting, and I don't trade currencies, you know, and watching this chart here, I would feel confident trading this, you know, just knowing technical analysis, and that's the beauty of it, that you can just pick up any chart and feel confident trading it, even though, you know, I haven't really, you know, had experience with currencies and trading them even short term. I'm more of a stock and commodity trader, but this looks so much, you know, so technical.
So easy, right?
So easy, right? Yeah, when you know what you're looking at, it's just, you can just work out a strategy on it.
And yet a lot of these people who are trying to trade it are trading with their blinkers on, really, aren't they?
Yeah, because they're zooming too much into the market to begin with. I mean, there's nothing wrong with that if you want to work that way and eventually get there. But it's like, would you try to fly a plane with 2 minutes of practice? I mean, try to dive into the deep end. Initially, it's a process to get there.
Exactly. Yeah. Great advice. Any last minute comment?
Yeah, just watch those two levels. I mean, really watch that 140 level and watch the developments with what is happening, because this type of congestion here, like you saw back through these periods, might lend itself to a really nice breakout trade in the next couple of months. Thank
you very much. Now, Phil has shared some really juicy bits there, so you might want to watch that again if you've already watched it once and pick up a bit more. If you want the skills to analyse stocks just like you have seen tonight, visit our website, wealthwithin.com.au. Now let's get into our topic and get into some more stocks. Pedro, what have you got for us?
All right, next one we have Strike Energy. Now this one, it's not for the faint-hearted.
This is Pedro style.
This is my style. Now we're talking. Now this is where the action is, okay, right?
So it's not my thing.
I don't think so. Yeah,
you might.
What, 11 cents? Yeah, that's Pedro.
11 cents. Yeah. I mean, at the moment, probably not mine. I won't claim it yet, but it's definitely one that I'd keep on the watch list, because once this one turns, I mean, look at these moves, and I'll just outline them here with the price range percentage. You've got 330% in the space of 2 months. So that's a nice little return if you can time it right.
So on that, if someone's going to trade this sort of stock, how vigilant do they need to be in watching it?
Oh, you'd need to be on it like a hawk. And that's, I think that's a very good point, because you need to figure out how much time you have to trade, how much time you have to dedicate it to trading. That will determine what type of stocks you can trade. I mean, you can look at the top 20 and then maybe having a look at them once a week, and you can manage them with a nice trend line or something like that. But something like this, you'd have to be on it, because any news is going to turn it. And I believe today there was something that came out around Strike Energy. So I do believe it's up around the manner of 6%, which is nothing where, in terms of this stock. But at the same time, you don't want to be stuck in these moves like we have seen from 2013 to 2016. So imagine, all this time here, 3 years of it just going sideways. But at the same time, if you can trade it properly, you can still eke out some nice returns. It's just, it's just more range bound. You can eke out, say, around that 50 to 60% as you go on with it. So I'd be looking at the lower time frame. I'd be looking at the bigger time frame to guide me in where we're at in the grand scheme of things. But to trade it, you'd have to go down to the weekly. I wouldn't go to the daily on this one. I mean, I'm already getting a little bit scared here looking at the weekly. Just looking at those bars, there's a little bit of liquid there. But this one's definitely more of a news-related one. It looks like something is happening here. A break to the upside or to the downside is on the cards. I know that I'm hedging my kind of opinions here. It could go up or down. But that's basically what you have to do as a trader, right? There's two options. You can go up or down. And right now I'd be putting my line in the sand at 12 cents for the upside and 1 cent to the downside. So not 1 cent, 10 cents. You have so many zeros there, it's be confusing. But there's a nice gap as well there on the upside. So I'll just outline that gap.
Now,
there,
we do seem to be getting on the smaller side here with some of these stocks, but bear with us. There are some really interesting ones coming up. So we've got BTL, Phil.
Yep, that's what happens when we leave Pedro in charge of the stock selection. But let's go to
Cowboy.
The next one, which is BTL. Now, this is Beetaloo Energy Australia. All right, another stock. In the smaller end of the market, but I mean, we did cover the big boys a little bit earlier. Now, when I zoom this out on the monthly chart, because I want to start there, and this is an important point as well, when you are looking at these stocks, don't be afraid to zoom out and look big picture as well, because you'll identify some serious things to look at for this one rather than really dive in super short term. And for me already, what stands out is this level through here. I mean, 40 cents has been a level that the stock has tried to get through on 3 occasions, if not 4, from 2018 to 2020. So when you know that price action, when you see how sharp the fall was that came into that, clearly we've not been able to clear that selling. That was serious, and no buyers have really wanted to participate. So for me, where this stock gets interesting is above here. Get through that selling, get at about 75 cents, and I think then it becomes interesting. And people might think, well, why would you wait and give up, if I draw the percentage tool, why would you wait? Some might want to get involved right now and think, well, 30% is enough. Why would you want to give up 140%? It's because when you're then able to structure a risk-reward scenario at the safe chunk of the trend, you eliminate a lot of those false entries and a lot of those buys that are going to turn into sales quickly. So I don't care if I'm going to give up 150% off these lows, because I know once you start transacting through these levels, if not higher, there's still plenty to come, and that's just the move itself. We're not even talking about the risk-reward scenario if you can tighten those structures of trades, which you're going to get as more price action unfolds. So I think this one, I don't know, Pedro, probably a little bit early for me.
Yeah.
Look, for those who do our course, they start to understand the different phases that unfold, and that's really important, isn't it? And this looks like it's turned that corner some time ago and has bounced off a bottom. I mean, if it was a bigger stock, I'd probably be, interested in it myself. But so someone who's learning at this stage, it's not a stock for a beginner, is it?
I mean, it's, see, it's interesting with that. It's
because, these are the stocks that could just drop out of bed overnight on news, like Pedro was saying before. And what does the beginner's psychology consist of?
Yeah. And then
that's it's like the seesaw from greed and fear, rather than having that balance that you get once you've done the education.
It's the big point. It's like going into the super fast roller coaster rather than, starting off slow. And look, for some people, just the learning side of it, I mean, I'm not totally against just seeing what it is to learn it, but to start trading there, probably not.
Yeah. So you can have a go once you've gained the experience and you start to get a bit of confidence, but you don't want to get smashed on these little ones at the start and
think the market's
the psychology becomes a bigger issue than the actual dollar amount, isn't it?
Exactly right, yep. Now, I have to say that these are pure oil plays right now. So Australia, unfortunately, doesn't have too many oil resource. A lot of these are trying to discover. America obviously has more, but these are pure oil plays. So just so the viewers out there know, because next up we have Tamboran Resources.
There you go, I like this.
So this one is not bad. And this is one of the ones that have recently IPO'd, 2021. It came down all the way to that 11 cents, then got bought up in February 2024, and then came back and retested that level. Look at that. That is textbook. I'm loving the fact that it came back to retest that level, and now it's actually come up. So for me, the more conservative level to watch out for is that 25 cents if it gets above there. And like Phil was saying, don't be worried about leaving some price or some profits on the table. It's only 35% really. Because another thing to note is that as the stocks go up in price, they actually become more liquid because there's more participants in the market, right? There's going to be, more funds getting interested in it. Janine may get interested in it after $1.
A big difference.
It's a big difference. It has to go up 4 times.
Well, that's what happened to Drone Shield. Drone Shield started going into the higher market caps. Like it's in the top 200 now.
Yeah.
It didn't start off that way.
So true.
Yep. Yeah, and it happened pretty much over a few months, didn't it? It was pretty quick. So, I mean, this is one that, is looking interesting. It could be one just for the watch list for now. Let's go to the weekly to see what's happening more of, in that short to medium term space. There's more volume coming into it. That's interesting. Actually, the whole period, the whole year has seen more volume, and it's respecting a nice momentum here to the upside. I mean, that's beautiful. Look at that. If it holds that momentum there could be a nice short-term trade. So this one could be short, medium, or long if you wanted to ride out the company.
Such interesting feedback from Pedro. Okay, moving on to Horizon Oil HZN.
All right, I've got this one. Another one that looks quite interesting. Yep, I don't mind this either as well. I mean, again, very similar type unfolding with what we saw earlier on the previous stock, but this one's continued on with it, which is quite nice. Now, one level I am seeing, which is super important for this stock, is if we zoom that out a bit further, is where we're positioned right now. And it's this 20 cents, if you will, level. We've seen it be resistance in the past. Look at the price of greens when it gets around there. Again, bounced off it, agreed through there, bounced off it, and now we're getting a greens through here. So I think being we're on the flip side of it, I like what's happening. You can also see that the nature of the price action has really changed. Have a look back from 04 to everything we saw up until 2016. Really sharp, volatile moves, something you'd expect for a stock that is, dare I say, in that space where, it's a true small cap in terms of being speculated on up and down. Now, one thing I would suggest is look at the structure of the company because things might have changed. This has settled down a lot and it's performing in really clean trend. If I apply that momentum here on the way up, I like the fact that it's, really uniform right now. So as long as it holds through here, holds above that level at 20 cents, I think watch this space, and any breaks above 22, 24 cents could push this for a nice little run. And I'm thinking, a good little run up until that 30-cent mark short term. So, yeah, watch the volatility, see that it's settled, notice if anything changes. 30 cents is probably a safe marker moving forward.
Beautiful.
Fantastic. Yep, well now the vote. All right, so of the stocks that we've looked at in both segments, so you started with the big caps, the Woodside, Santos, etc., and then down to the micro, the small. So maybe give us one from each.
Well, look, for the large caps, I'd go for the Woodside, but for the micros, for the small ones, I'm going for Tambourine.
Right.
Yeah,
Yep.
Tambourine Resources.
Okay, and Phil?
Yep, no, same.
Same. You boys are sticking together, eh?
Well, I mean,
Good analyst.
good eyes know what they're looking at, so yeah.
Okay, moving on shortly, we're going to get into our hot stock tip, which looks amazing right now. But first, let's answer your questions. Mandy writes, can you please cover AUK? Ook? Is that the
AUK, yeah.
AUK?
Yep.
I would like to understand if this stock has any potential to grow, maybe an interview with AUK with your team to get more information around this company would be great, and coverage on your show. What's your thoughts?
Yeah, I mean, look, I don't know if Mandy's trying to do a bit of a promo there, but nice try. Looking at AUK, what's interesting to me now, look, there's speculative and then there's really speculative. And I just need to look at this weekly chart here and say, boy, there is hardly any liquidity in this. I would not be touching it with Pedro's money.
Yeah.
That's what I'm going to say here. And unfortunately, Mandy, I mean, this is one of those stocks, look at it, from 2017, it's literally flatlined. And I guess the more concerning part for me is you find with a lot of stocks when they start their IPO, there's the I guess, the possibility, the hype about what may be. And you sometimes see price reaction, over exceed what it should be because they're on that, what could be, it's new, it's fresh. Then reality sets in and the stock falls away. A lot of the times, if it's a good company, it finds a way to recover on that third leg, fourth leg, fifth leg. And that's when you see the real growth. This has just capitulated into nothing. And there are so many good stocks on our market, so many stocks that have price movement to be trading this. I don't know what you're seeing or what you know, and better you keep it to yourself if you do know something, but no, not for me, sorry.
Okay, very good. Justin's email is next. I'm reaching out regarding my position in PCK. I've invested a significant amount with an average purchase price of 40 cents or 0.4 cents, it looks like there. And I also hold options expiring on the 20th of December at 0.5 cents. Given the recent FDA approval, which I expected to drive the share price higher, I was surprised to see the price move in the opposite direction. This is especially confusing considering the company has a CEO, reputable CEO in Philip Daffis. Can you provide insight on why the price may be reaching this way or reacting this way and what your outlook is?
All right.
Oof.
Pedro, do you want to go for that one?
Yeah, look, I'll start off by saying, mate, drinks on you. If you bought this stock at, and I'll change this was a daily chart, this is a weekly. If you bought this at 4 cents and it's now trading at 37 cents, you have done very well.
Well, that's this week.
That's this week. It's
So a
just
takeover
gapped
perhaps.
up. Must be something going on here. That represents a 860% return. That is quite, nice. Look, it's great, celebrate the win, but can you reproduce it? And that's what I always look at.
Well, it's an FDA approval, not
that,
necessarily a takeover, as they said. But
of course.
Well, he mentioned as following the FDA approval, the share price fell, and he wasn't understanding why. So I think it's probably to do with what happened if we go back to that chart, to this section here where FDA approval came because he bought at 4 and then price fell away. He was probably expecting a bigger rise up. But I think the point on that, which is so interesting, is that, and people do this a lot, they think, okay, the news is good, why is the share price must move right now because the news is, I think it's great. And it doesn't always work out that way. In fact, a lot of the time it doesn't work out when you think the price will rise. And you're seeing it right now. It's happened many months later, which again is so important to have patience, to know that the timing of your entry on those charts is optimal so that you can, at least give yourself the chance without going into drawdown or getting stopped out, or all those things that can happen.
And also staying up to date with the latest news is so important on these little ones, isn't it?
Yeah, definitely. I think this is one that you'd park some money in it and you just wait for that FDA approval.
Geez, do you take some off the table now?
Yeah, I'd be taking some off the table. I'd be going on a nice trip with that one because really it's done nothing. If you go back, it's done nothing since 2022 for the last 3 years. So I'm not sure how much he's averaged in over what period of time. But definitely I'd be celebrating if finally 860%, not bad.
Nice, very nice indeed. All right, Nindia is next and writes, I have a question regarding one of my holdings, GG8. I purchased at 50 cents while I was expecting some upward movement based on their exploration results. The price has been trading sideways between 36 cents and 45 cents. Given that the 3 and 5 year charts show a positive longer term trend and the business appears to be progressing, would you suggest buying more? For example, an additional 4,000 shares around the lower end of the range, around 36 cents, and then exit in a couple of weeks. I mean, that's interesting, isn't it? Adding to the position.
Dollar cost average.
Yeah, I mean, who wants to go on this one? Phil, did you?
Yeah, I'm happy to talk about it. I mean, two things. The first thing that I took from that email was, then get rid of it in a couple of weeks. Why a couple of weeks? What makes you think that in a couple of weeks it's going to be ready to get rid of, or it's going to be in a spot where you anticipate it to be? That's the first thing. These assumptions are what trips a lot of people up in the market. Don't expect anything, just follow. And if you know how to read price correctly, which again, as I mentioned, the things that we do teach here, when you know how to do that, you take away that element of guesswork. It's all about what the price is telling you in terms of what comes next. So when we go back to that chart and have a look, I think just adding more at a level for the sake of, because you bought more there in the past and it appears cheap to you. I mean, if you have ultra conviction and you're just filling up a position to really take the maximum of what you were going to get initially because of liquidity issues or whatever, then okay. But you've already bought at 50 cents and you haven't been validated because price has fallen. So now you're going to take more risk and you're still not validated at a lower level. How many times are you going to keep doing that, until things may turn for you, but then a lot of the times they may not.
But that's that old dollar cost averaging thinking, isn't it? Which, I mean, on a spec stock.
Yeah.
I mean, I disagree with it even on big stocks, but with the big stocks, at least they could probably get away with it if they're in a bull market overall. But with the spec stock...
That's why it pays to have conviction in, not just conviction in the stock, conviction in knowing when to get in and out.
Yeah.
That's where the real conviction is, because that will then allow you to ride the trend as it's unfolding, once it's unfolded, not waiting before it to unfold, which may not happen. So that said, if we go back to that chart, I actually really like this stock because I'll tell you, and right now what it's doing, okay, you don't have any real markers to say it's going to go up, but when you know how to look at it, and I'm not going to dive into it when exactly, but when price action tells you, and it may be coming soon, especially the way this is unfolding on the monthly chart, this might be setting up for a big break up to that 80, 90 cent level, even $1. So, but I'm not just because it looks that way, I'm not saying just jump in today. It's going to need to confirm with a bit more of a move, and that could happen really soon. So I think maybe the best idea isn't to just keep buying more as it's falling. I would wait for price to at least get above your 50 cent level to have a bit more confidence that, hey, you know what, I'm correct in what I'm thinking here at these levels, because there's nothing to say that this can't go back down to 20 cents. But right now, the way it looks, it's setting up potentially for a nice breakup.
Yep, that's really good advice, not putting more risk on top of the risk that you've already got when the stock hasn't proven that it's going the right way. Can end in disaster. Now we now have Lewis's email. I'm still very new to trading, and even though a major market downturn might be a long way off, the idea of an inevitable crash makes me hesitant to fully commit. A friend mentioned that stocks like Whitehaven Coal might be more resilient during a crash. Is that true? And if so, are there certain sectors or large miners I should be focused on as a beginner. Now, this has got so many things in it, okay, Pedro? Because for a start, we're talking about what is a safe sector or area of the market to be in if there's a crash. And,
cash.
you know, a friend has actually given advice on what's actually performed in the past. Well, what chart are they looking at? And like, you know, if you just go back to the GFC, what was happening to this stock? It doesn't make sense to me what this person's been told.
Yeah, that's right. Yeah, I mean, first of all, getting advice. I mean, is your friend in the market? Does he know how to trade? That's the first questions that I'll be asking. But no stock is crash proof. And the only real way to be crash proof is to have certain rules that you have determined on the chart yourself. So if any stock turns down by a certain amount, or you've got your preset levels, you take that exit, and then if the crash happens, you're out of it. You know, that's really the key here. You're not going to be able to pick a crash-proof stock. I mean, there's going to be certain sectors like maybe staples, or like utilities, things like that people need, that maybe will be able to hold out a little bit better during a crash. But if the people taking the cash out of the stocks, they're going to take it out regardless. So
I mean, that psychological thing of asking someone who, I don't know what their credentials are, but asking someone for advice is almost like you know, right now everybody wants instant gratification on the internet. You want an instant answer to something so that you can make a decision rather than actually having done everything that's required in the lead up to making that decision yourself.
Yeah, and it's not even that. I mean, I think when it comes to the stock market, a lot of people link a successful trade to knowledge. And so the friend may have bought a stock, it goes up because he heard it from a friend, he's made money, now all of a sudden he thinks that he's an expert in the stock market or he knows how to trade the market. In fact, it's giving you this false...
Well, they're linking it to someone who's traded before, not knowing whether they've actually got decent knowledge. That's what you're saying, isn't it?
Well, I'm just saying that you can be lied to into thinking just because you've made money out of the stock market that you know what you're doing. That happens in most bull markets. A lot of people think that in a bull market they, you know, which becomes easy picking, they fall into the trap of thinking, oh, I can work this thing out, the stock market. And then the character of the market changes and they get wiped. So that's, I think, where it's totally understandable where people fall into this trap. But don't just think because you've churned a profit out of the market that you know what you're doing. That's my point. And that's what his friend may be willing to quickly give out advice and say, hey, I'm here to help you, because he thinks now he knows what's going on.
But how's the friend going to feel, you know, if he tells him to go into certain stocks or certain sectors and then during the crunch when the...
Well, he doesn't know.
Well,
3 years.
My advice would be is don't look for crash-proof stocks. Make yourself crash-proof.
Great answer.
Because that is what's really going to make you survive in the market. You know, by learning how to trade, by learning technical analysis, you make yourself crash-proof because then you carry that knowledge with you.
That's fantastic. Thank you very much for that. That's wonderful. Some great advice. Now time for our hot stock tip for the week. Pedro.
All right, so the hot stock tip this week is Deep Yellow Limited. Before we get to the chart, let's check out the big news today. Deep Yellow has appointed Greg Field, a highly experienced Rio Tinto executive with a strong track record in delivering major mining projects, as its new CEO starting no later than May 2026. The board says he's the right person to lead, and Field himself believes uranium demand is strengthening and says Deep Yellow is well positioned to benefit as the sector grows. But of course, let's see what the chart is telling us.
All right.
So the chart is telling us it's in a nice uptrend. That is my first observation. I'm just going to put not a momentum in the traditional sense, but just kind of like, you know, just I would say, the momentum that it's riding at, its ebbs and flows are around this level here. So it looks like it is below that momentum line that I've drawn. It could actually come back up and you know, just trail around that momentum up to that $2.40 it's looking like. So what I find interesting about this is if I've got the right tool here, I can, oh, no, wrong one. So what I find is that it travels in these sideways consolidations and then breaks up. Sideways consolidations and then breaks up. It could be happening right now that we're getting a bit of a sideways consolidation before the breakup. So you could be sitting on it for a little bit. That would be my only concern if it does repeat that previous run. But in saying that, in the past, we've got these huge moves to the upside that when it goes, in just 1 month in October 2006, we've got these, these ranges up around that 100%, and then even a further 100% up, 237, and then even to that high there, we had that 500%. So it could do these runs in the space of a couple of months. So right now, it's below that level here that I'm going to mark around that at $1.80, which has been an important level. And I would say that the next possible support level that it might find is around that $1.40. So it could trail around here and then break to the upside. So I'd be watching this one. It could be good news, but obviously it'll take some time to trickle into the market and its fundamentals.
Yeah. Can I just have a look at the weekly chart there? Can you bring that up? I just want to see what's happening with the shorter term price action. I mean, long term, it looks bullish, but what about right now?
Yeah, right now it's coming off a few bearish bars. We've got these weekly bars here that have really driven the stock down, and we're not seeing really volume coming into it, but you're getting that bit of a squeeze here, and that's what's interesting. So there's a bit of a squeeze happening with price. You can see it right there. And usually what happens when it coils up, it either breaks to the upside or breaks to the downside. So this could be in the precipice of a significant move, and it could actually come back up to fill that gap.
Now, how normal is this, Phil, when you see a CEO get, shifted out and another one comes in, that the company sort of goes into a sort of a stall mode from a price point of view?
Well, one thing the market doesn't like is uncertainty. And right now, this is a moment of uncertainty. Yes, there is a level of certainty that they've got somebody, but it's like, well, will he perform? And the thing I like about the chart, though, which is really interesting to me, is when you look at Deep Yellow, again, it's talking about how things have changed. This is a uranium stock, obviously in a space that is getting a lot of talk right now in terms of the future. We're seeing certain countries around the world like China, India, really embracing this as the future. But when I just look at price action, because really that's all you need, this scenario from what we've seen from 2009 to today, this move up and the way it's happening, if I just take away a lot of Pedro's lines here, really represents in price the dynamics of the situation changing. And what I mean by that is, yes, okay, we take away everything that's happened through here, but these levels that Pedro identified of congestion, what they're telling us, price is being agreed upon at higher levels. And that hasn't happened for a long time with this. You can see runs up have been equally met with runs down. When you see this type of price action, volatile up and volatile down, that's just speculation. Where's the support of that buying? If there's support, it should continue to go up or base higher. It's not doing any of that. Again, we see buying, all just speculation, reversing quickly. This is different. And that's why when you tie in a bit of the macro stuff going on as well, and you see the way this stock has changed and settled down, I think if you're not looking at it today, you need to be looking at this. I'm not necessarily saying you need to buy or sell, but I'm saying definitely look at it, because the more it unfolds in this type of manner and continues to find higher bases, those opportunities are going to get bigger and bigger. And what we know about trends is they start off small, they start off, and then the meatiest part of the trend hasn't unfolded yet. So that's the exciting part.
Yeah, I like your thinking there. Any final comment on the hot stock tip?
He's done all right.
No?
Yeah,
I think all right.
Yeah, I think it's all right. I mean,
think you agree with Phil?
Yeah, I'd be looking at this one. It's probably not my favourite uranium one. Sorry to put a bit of a damper on it, but it is an interesting one. I'd be watching this.
Okay, awesome. All right, if you want more from us, check out our video, 8 ASX tech stocks just hit rock bottom, time to buy.